This is the Southside School of Financial Freedom Watch List and Market Report for the week ending September 12, 2020. Our question this week is, what is a market correction? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways. Economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was down. It was the second down week in a row. The Dow Jones Industrial Average increased 0.48% on Friday, but was down minus 1.66% for the week. The S&P 500 increased 0.05% on Friday, but was down negative 2.11% for the week. The Nasdaq decreased minus 0.60% on Friday and decreased minus 4.06% for the week. Looking at the week, the market was closed on Monday for Labor Day. The Dow Jones Industrial Average and the S&P 500 and the Nasdaq all fell on Tuesday, which was the first trading day of the week. They rebounded on Wednesday, but they all fell again on Thursday. On Friday, the Dow Jones Industrial Average and the S&P 500 rose, but the Nasdaq fell. The Nasdaq has fallen 9.98% since its record close on September 2nd, which brings us to our question of the week. What is a market correction? A market correction is generally defined as a 10% decline in value. The Nasdaq having declined minus 9.98% in value over the last 10 days is basically in a market correction. On Thursday, the new unemployment claims were 884,000 versus 850,000 expected. So the new claims were 34,000 worse than expected. Not a big miss, but a miss nonetheless. Continuing unemployment claims were 13.385 million. Congress still hasn't come up with a new stimulus deal to help people who lost their jobs due to the pandemic. The Senate failed to pass their stimulus bill. SoftBank, a big Japanese investment fund, was reported to have made huge trades on tech companies. And AstraZeneca resumed their coronavirus vaccine clinical trials after they had paused it due to a trial's participants' illness. New unemployment claims, congressional actions and inactions, pandemic vaccine developments, and trades made by huge investment funds are all news, and news drives the market, good or bad. The market is very difficult to predict because the news is very difficult to predict. However, the market is rigged. It's rigged to go up. It does not go up every day, but it will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. One of the powers that be is big corporations like Apple, Google, Amazon, and others. The objective of a corporation is to drive up the price of their stock. Their directors, officers, and employees are often compensated with corporate stock. So they, along with investors, want their stock price to go up. Corporations will do what they must to drive up the price of their stocks, and that, of course, includes stock buybacks. Do you work for a corporation? Are you compensated with your corporation stock? Does your employer provide you with a retirement plan like a 401k where you can invest in stocks? Do you own any stocks? If not, why not? Are you afraid that the stock market is going to fall? Stock prices may fall, and they do fall. Matter of fact, the stock market has fallen for the last 2 weeks. Are the Dow Jones Industrial Average and the S&P 500 going to go into a market correction like the Nasdaq has? Will the whole market correct? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at the Southside School of Financial Freedom.com. Here is my trading watch list for the week ending September 12, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Viacom, CBS. That's ticker symbol VIAC. It's in the third column. It increased by 1.84% for the week, though it did decline on Friday by minus 0.07%. The company is going to have an ex-dividend date next week. Some investors like to buy a company stock just before the ex-dividend date so that they can qualify to receive the dividend. However, this particular dividend strategy is not a very good one because stocks normally go down after the ex-dividend date. But sometimes they don't go down. VIAC is a media company. It is a merger between CBS and Viacom. Media company stocks usually go up in an election year, but sometimes they don't. I had a trade on VIAC this week and I did generate cash flow from it, and I have generated cash flow from it in the past as well. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of September 12th, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY. Year to date, my portfolio is up 17.54% versus 9.77% for SPY, a difference of 7.77%. I am beating SPY by 7.77%. This week, equities, including puts, calls, and ETFs, make up 88.21% of the portfolio. Cash is 11.79%. The cash flow generated for this week was 2.22% of the portfolio account value. The account value decreased by minus 0.37%. Meanwhile, The S&P 500 ETF SPY decreased by minus 2.48% this week. I sold option contracts on 9 positions this week, 8 calls and 1 put. That ranged from $133.01 to $608.65. I also received a dividend of $51. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of FinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.